Okay, so welcome to the Zoom. This is a power behind Fibonacci, and we use Fibonacci to actually help us to identify areas and zones of retracement and profit targets. Okay, so we use it to identify areas where the market may turn around with the highest probability, and we use it to plot targets. And I'm sure Zane's going to go through that in a few moments. Okay, but just before we start, I just want to give you an intro, and I want to tell you that the Fibonacci is an indicator. Okay, and a lot of people, new traders and experienced traders as well, still have this myth that indicators predict the future. Well, they don't. Okay, what they do, indicators actually indicate. Okay, may sound like common sense, but that's what they do. They give you an indication as to what price is likely to do. Inside the pit room, we do use indicators. And I'm not saying to just use price. I've seen in some groups where people are saying, I just use price action alone. Well, good luck with that. Price is the truth. I won't tell you that, but you do need a little bit more just to ensure that when you do cross the road, that you don't get knocked over, as many of those price action traders alone and naked traders would do. Indicators indicate, but they do tell, and they tell you the highest probability, if used correctly, of what is the nature and what could possibly happen in the market. Okay, now I would say, you know, when you join the pit room, seeing is believing. You've seen a lot, you guys have seen posts. We done like over 700 pips last week, and that's net. Okay, so we would have caught over 900 pips. Maybe we've lost 2 trades, totaling 100. Give you maybe 800 pips. They're not micro pips, guys. These are real pips. And again, the thing is that I get queries saying, you know, I live in New York. I live, you know, I might not catch a London session. We actually throw down 3 to 5 pips daily. 3 to 5 signals per day during London, New York, and Asian. So even if you're working wherever you are in the world, you'll still be able to partake in the signal service. Okay. So that being said, I must tell you guys that I have found a way to predict the future in terms of Forex. Okay, I'm gonna tell you about that right now, and how I've been able. The reason why they call me Nostradamus is because I have incredible skills to predict the future. Okay, so last week we done 419 pips. Just hold with me a minute, right? 419 pips net positive. Okay, I've already told you that this week we have done 793 pips net positive. Okay, and this week alone we did 740 pips, and it was only Wednesday, guys. Okay, only Wednesday. Now the average trader needs about 50 pips a week, believe it or not. Many of you, or some of you, are out there trying to catch every single pip. You know, not speaking to your wife, husband, whatever, and looking at charts. You only need roughly about 50 pips a week. If you're using a standard lot, that's 500 pips. That's $500 a week, which is $2,000 a month. Sounds easy, right? Well, if you don't know what you're doing, you're probably going to be down 500, maybe $1,000 a week. If you have expert advice, recommendations as to the signals with highest probability, then you probably have a pretty good chance of catching just 50 pips a week, guys. Okay, I'm telling you guys, in the pit room, it's lit. One trade this week did 293 pips. Okay, now I don't know about you, but 50 pips a week, that's easy, right? Well, last month we caught 2,000 pips, over 2,000 pips. Okay, so that's giving you almost, you know, maybe let me just put it this way, right? The month before we caught 2,000 pips, and if you look here at the trades that we caught in the pit room, even if you're sleeping and you need 50 pips a week, choose one of these trades to catch 50 pips. Choose 2 of these trades to catch 50 pips. And even if you get stung with Euro NZD, basically we had 11 wins and 2 losses, guys, or 2 no wins. Okay, that's us as a group, not just me and Zane. This is us as a group. Even if you chose 2 of these trades from these 11 wins when you're sleeping, surely tell me if it's possible. Type Y in the box if you're capable of pressing the sell and buy button and following the signal and catching maybe 3 or 4 pips, 3 or 4 trades a week, 5 trades even a week. out of 11. Half of the trades. Could you do that? Just type Y in the box if you can. Type no in the box if you can't. Okay, and right, why? Yes. Okay, so what you have is, again, you've got, this was last month. This is another example where all of these signals we caught, and 16 wins and 5 losses. Okay, just keep yourself on mute, please, if you come on the call, or don't unmute yourself until the end. And like I said, it's 3 to 5 signals a week that we actually catch. So before we actually start this session, guys, okay, and if you haven't joined the pit room, you want to check it out right here. It's PipBandits.com, 8 p.m. Check that out and join, because you'll be doing yourself a huge favor in trying to figure out a very complicated market, learning from guys that have been trading for a while and are profitable every week. We've got people in the group that are withdrawing substantial amounts, and it's all because of our signals and the group training and mentorship that we actually offer. Okay, so make sure you get on that and do not miss out. Okay, but what I want you to do before you start this session with Fibonacci is I want you to forget everything that you've learned about Fibonacci or heard. Get that out of your mind. I want you to open up your mind, guys, okay, to something new. Okay, I want you to open up your mind to how we actually use Fibonacci to see reversal zones and to look at the retracements to plot targets, okay, with the trend in a trended market, guys. Very important, okay? And I want you to take notes. Really important to take notes. This is going to be recorded, so the recording, in fact, is a note for you, but take notes for yourself, because, again, it shows that you're paying attention, and it helps you when you write down things. It further reinforces your learning. And finally, what I would like you to do is to ask questions. This is an interactive session. Please put your questions in the chat box. And also, at the end, we're going to give you guys at least 10 minutes to ask us questions. Okay? So, without further ado, I'd like to hand you over to our guy, Leonardo Fibonacci. Well, no, his name is not Leonardo Fibonacci. His name is actually Zain Ahmed. He is the Darth Vader of the pit room, the pit Vader. And he's going to take over now and just take you guys through some of the secrets and actually how we use Fibonacci. So, Zain, if you're there.
Perfect. Okay, again, you know, I love it when Nos does intros, because, you know, I get showered with love, you know, before I go ahead and do my thing. But no, thanks for the kind words, Nos. Welcome, everyone. There's about 20 of you on the call right now. Welcome, everyone. I see a few familiar faces, a few names even I'm not seeing in quite a while. But welcome, you know, Saturday, 5 p.m. right here, right now.
Whoa,
in,
one more thing before
Go
we
for it.
Yeah, I'd like to say a huge congratulations to yourself on achieving your qualification. And this is what I want to say to you guys. Look, you know, Zain is one of our head traders, and he also just completed his studies, which many of you know that are in the pit room, to a very high standard, right? And you know, we have life. We're not just trading. We might be trading full time or even part time, and you know, it can still all be done. Every one of us trade for a particular reason, you know, and that's why I'm glad and pleased to see the turnout on these calls, because it shows that you're serious about your trading and that you really want to increase your income. So congratulations again, Zain, and everything that you do in the future.
Excellent, right, brilliant. I really appreciate that, Nos. You know, yeah, Nos, you know, hit the nail on the head when he says, and I got people messaging me as well saying, you know, right, I can't take this signal because I'm in this time zone and I'm working or whatever. And listen, I'm not saying get your phones out in front of your bosses at work, because it's not going to look good. But like Nos said, you don't need the 2,000 plus pips, you know, not all of them anyway. If you can catch them all, great. If not, not a problem. You need roughly between 45 to 50 pips a week. All right. One thing I will say, Nos, if you could just monitor the people that are on mute and not mute, that would be great. Any questions, you can save them to the end as well. So, yeah, no. So thanks a lot, guys, for joining this call. Hope everyone's doing well on a Saturday. It's quite sunny here, to be fair. I'm just going to give me a second. I'm going to close my living room window. The neighbours next door on a little bit of a party. Bear me a sec. Right, apologies. Okay, so yeah, today's session is a session for those who requested it. Going back to Sunday, we had our markup call. We have every Sunday. We're going to have one tomorrow as well, 4 p.m. If you're in the PIP room, that is, then obviously you get the weekly forecast on YouTube for those who are not in a PIP room. But tomorrow we go over the charts which the members want to look at. You know, we go into some sort of depth regarding certain pairs as well. But off the back of last Sunday's call, quite a few people messaged me saying, Zane, you know, I know you use fibs, and I use a variety of different tools and indicators and you know, confluence and all that kind of stuff, and price action to round it all up to give me my trade setup, right? So they said, right, we want to learn a bit more about Fibonacci, and I thought, okay, cool, let me do a session, okay, that's open to everyone, right? Because I know how important Fibonacci retracements, Fibonacci extension levels are to not just me, but also you, okay? The reason why it's so important, and we'll touch on this at the start of the presentation, is because Fibonacci isn't just primarily for the markets, okay? And we're going to go on to it now. We're going to discuss what Fibonacci is, okay? And to me, you know, I always use it as a very good indicator for many different reasons, okay? The institutional banks, the big businesses, hedge funds, okay? The financial institutions, they all use Fibonacci, okay? Amongst traders, the general consensus is, you know, I know a lot of traders do different indicators and all that kind of stuff, but the general consensus, guys, around Fibonacci, it is that it is the most useful and most commonly used indicator tool on any platform. All right, and there's reasons for that. So we're going to go ahead and get started now, okay? This presentation should last about 30 to 40 minutes. Then we're going to have some questions at the end. You know, you guys can mute yourselves, how we can work around it, not a problem. And yeah, that would be great. I tell you what, spare me a second, I'll get this all sorted for you guys. Okay, so if please can put a 1 in the chat if you can see my screen. Yeah, people should be able to see my screen. Yeah, yep. Okay, brilliant. Right, the science of Fibonacci, okay, composed by myself, Zen Gardens, one of the pit room traders. All right, now, there we go. What will we cover today? We're going to talk about what Fibonacci is. Who is Fibonacci? Okay. What was the thesis behind it? Okay. Now, I'm not going to give you a history lesson, but I always thought when I was doing my studies or learning about trading or whatever, when I was reading the books, when I was reading the academic papers, when I was studying, I always wanted to know a bit more about the author, you know, and those reasons for that. Not because really I was interested in their life, you know, I wanted to know what their mindset was when they wrote that, when they discovered that. It's very important to understand, or try to understand, that specific person's mindset to see what he or she was thinking. And you'll notice this was years ago, centuries ago, and it's still applicable today. We're going to talk about what retracements are. Okay. We're going to talk about what the benefits of these specific retracements are. We're going to talk about the key retracement levels. And then we're going to look at extension levels. Okay, so we're going to cover it all today, basically. All right, we're going to cover it all from head to toe. From head to toe. Okay, so who is Fibonacci? Okay, like I said, I'm not here to give you a history lesson, but it's important to understand, right? Leonardo Pisano was born in Pisa during the 12th century. So this is centuries ago, guys. Okay, this isn't a recent concept that came about 10 years ago while someone was watching TV or having dinner, you know. back then currencies like GBP, NOK, NZD didn't exist, you know. Back then people were literally trading horses and steel, right? So you see this little tool here, this little, not tool, this image here, a spiral shape. Okay, this is essentially what Fibonacci was. It's a Fibonacci spiral. Okay, the purpose of it, as things get bigger or as a substance gets remains out in time, generally the more scope there is, right? And you'll see by the scope, I mean, these little squares in between start to get bigger. The more scope there is for you know, more change to happen, essentially. Okay. Same with, you know, the way you can apply this is to time frames. You can consider this the minute, short-term time frames, the longer-term time frames. In between is more pips. You know what I mean? In between is slightly more pips. So this Fibonacci was created in the 12th century. Okay. And what is this? I'm not crazy. I'm not crazy. I'm not just put this in randomly. All right. I've not put this in randomly. Okay. And no, these aren't my pets. It's rabbits. Okay. It's 2 rabbits. So it was in 1202 when, you know, the mathematician Leonardo Pisano, also known as Fibonacci, okay, he asked this question: how many pairs of rabbits can be produced from a single pair of rabbits in 1 year? Right? So you start off with 2 rabbits, right? And how many pairs of rabbits can be produced from that pair in 1 year? Okay? Right? So if you think about it, you have, say, 2 newborn rabbits. They're placed in a cage or in fence yard or wherever you want to put them. Okay, and they are given space and time to breed, like animals should do. And rabbits themselves can't actually reproduce until they're at least 1 month old, right? So the first month, only 1 pair remains, 2 rabbits. Yeah. At the end of the second month, when they're fertile and they're able to reproduce, the female gives birth, leaving 2 pairs of rabbits. Okay. And when the month 3 rolls around, the original pair of rabbits that we started off with produce yet another pair of newborns, right? And the earlier offspring, so the first offspring that's produced, are allowed to grow into adulthood. Okay. So this then leaves 3 pairs of rabbits, right? 2 of which will give birth to 2 more rabbits in the following month, and so on and so forth. Okay. So the order goes on. So your first month, 1 pair, then you 1 pair, you need 2 pair, 3, 5, 8, 13, so on and so forth, until essentially it goes to infinity, right? And you'll notice how, like I said, that each number is a sum of the previous 2, right? Now, I'm not sure how many mathematicians are in the room. Obviously, like I said, this is not a test or a history lesson, okay? But it's a sequence, okay? So this is a series of numbers known as the fib numbers or the fib sequence. And ironically enough, the ratio between these numbers is rounded up to 1.618034, or more commonly known in the trading world as retracement for 1.618. Okay. And people in the pip room would know I refer to this specific retracement as the golden ratio. Okay. So the reason why I've given you a little bit of a history lesson there, guys, is to see how the maths and the science behind it actually works. It's not recent, guys. This has been going on for centuries. That's why it's admired and adored by so many, well, not even traders. You know, look here. It's life, nature, right? A plant. This is a spiral fib, okay? Slightly different coordination points. But this picture here, right? Okay, if you were to put the same coordinates on the picture of Mona Lisa, you see the same thing, right? A car as well. Did you know the car is actually broken down to the engine and the exhaust and all these other parts going off fib levels because of its structure? So the point I'm trying to get here, guys, and we'll move on to the Forex stuff, but it's very important for you guys to know the whole point of fibs, okay, is not to like Nos said, predict the future, or it's not kind of a looking glass or anything like that where you can look inside and say, right, this is where it's going to go, or this market's going to go short now. It's just mathematically very, very accurate, okay? And you see it in nature, you see it in manufacturing, you see it in art, you see it in industry, okay? So it's a very old tool that's only recently, in the grand scheme of things, been applied to the financial markets, okay? So it does have, they say gray hairs of wisdom, right? Gray hairs mean wisdom. Well, Fibonacci probably has more gray hairs than any other indicator, okay? It's the real deal, folks. So we'll move on now to talking about what retracements actually are. Okay, this is quite a common misnomer, I think, personally. A lot of people think retracements indicate, oh, right, we're going to change completely now. No, okay? They're short-term price corrections during the overall upward trend or downward trend, i.e. pullbacks, right? And you'll commonly see fibs being used in higher time frames. Me personally, it's daily onwards, okay? Sometimes for me, even the daily can seem a bit too short. Once you start using them a bit more, you'll notice why, right? Now, retracements are price corrections, okay? So what tends to happen is when the uptrend starts, you have a lot of buyers in the market, a lot of buyers, everyone's buying, and afterwards the price gets exhausted. Then buyers start closing their trades, closing their profits. So you're left with less buyers, less buying pressure. Then the selling starts to come, right? That's the price correction. That's a temporary price reversal, okay? So they do not indicate a change in the direction of the larger trend. The larger trend still exists, right? Okay, so what are the Fibonacci retracements? So we talked about what Fibonacci was, and we talked about how it's used not only in the financial markets, which is more in the recent 20, 30 years, it's been known for that. Before that, it was used in paintings and all sorts, right? To indicate levels of structure, okay? So we've got here, the retracements are essentially these horizontal lines, and I'm sure a lot of you have seen it on whatever platform you use. Every platform, MetaTrader, TradingView, whatever, will have a Fibonacci tool there, okay? The key areas indicate key areas of support or resistance, okay? And you have different fib levels, okay? So indicate areas of support or resistance at the key fib levels before the trend continues in the original direction. What I was talking about in the previous slide, the short-term corrections, price corrections, okay? And people make a lot of money on the price corrections, okay? Now, there's 4 levels here, okay? And we'll go on to some actual examples later on towards the end. Now, 23.6, 38.2, 61.8, and 76.4. Okay, they are right the key fib levels, and for me, out of them 4, 38.2 and 61.8 are the ones which, as a general consensus amongst private traders, or like I said, big banks, big institutions, big financial services, 38.2, 61.8 are 2 of the most powerful levels you can use. Okay, so we talked about the Fibonacci retracements. There's obviously we'll come on to the specific live examples later on, but they're the 4 levels you need to watch out for. 38.2 and 61.8 are like the Ronaldo and Messi. Okay, forgive me, I'm a football maniac, right? It's Ronaldo and Messi of Fibonacci. Okay, so, and we already know how powerful 61.8 is, right? That we've seen it from the rabbit analogy I was given, you know. Now the sequence, when you divide the numbers, each time it comes out to roughly 618, 61.8 retracement, if you're talking percentage wise. Okay, so how to enter a trade using the Fib tool. So I presume everyone knows what the Fib tool is. Okay, no worries if not, because when it comes to live examples later on, if you're an MT4 on your phone, once you realize after this PowerPoint presentation, you'll be able to use it on MetaTrader 4 on your computer, desktop, phone, TradingView. I personally use TradingView. Those in the pip room will know that, but it's pretty much straightforward. Okay, this takes practice. That's all, practice. So you want to find a strong up or down trend. Best to be using swing analysis. That's what I was saying to you guys. I was saying to you guys how you want to use fibs on higher time frames. Okay, daily plus, right? Because on larger time frames, the trend's already established. Okay, think about it. To produce one 4-hour candle, it takes 4 1-hour candles, right? And I'm pretty sure we've seen it before in 4 hours where it goes on for weeks and weeks and weeks. So imagine how many hour candles that consists of. Okay, and those hour candles will not always flow straight. It's going to be pullbacks. Okay, so the daily for me, guys, is where you want to use it. Okay, that's where you best to find the actual trend. That's number 1, find the trend, right? 2, to enter an uptrending market, to go long, you want to enter in after the pullback, okay, i.e. the retracement itself. So once the price has gone up, pulled back, and the intraday sellers have taken control temporarily, the retracements happened. We've explained that retracements are just a short-term opposing pressure to the current trend. That's all it is, right? And it continues on. You want to get in after that retracement happens. And the opposite for a downtrending market, you want to enter after the pullback. Okay, the short-term buy happens after retracement there. Okay, so how do we know when the market will pull back? Great question. Okay, great question. No one ever knows, right, what's going to happen. No one, right? But it's all about having that idea, and that's where fibs can play a bit of a role. So this guide, I'm going to take this, break it down for you guys. So how to enter an uptrend. So we're talking up now, we're talking buying. Okay, we're talking about buying a commodity, whatever it might be, forex or whatever. Okay, you can use fibs on practically anything, stocks. Okay, for entering an uptrend, you need to see if price finds support at key fib levels. Okay, so this is our first image right here. We can see how we have price moving up. This is our uptrend, yeah? Now, obviously, I'll talk about how to draw them specifically. We have to go from the swing, the low in this case, the lowest point, i.e. the wick, okay, to the highest point, which is just around here, okay? Now, I've talked about these 3 levels, 23.6, 38.2, 61.8, okay, and 764. I haven't talked about 50%, okay? 50% itself isn't exactly directly part of Leonardo Fibonacci's retracement levels. However, it is when it comes to the financial markets. All right, 50% is considered it. Okay, but if we're talking from history perspective, it's not really considered a Fibonacci, a retracement. Okay, in the general grand scheme of things, but in the financial sector, it is. So you want to wait for price to find support, right, at some key level, right? And they're all key levels, but these are the three here you need to watch out for: 38.2, 50, and 61.8. Okay, that's your golden. These are your silver ratios. Okay, we talked about the maths behind 61.8, right? 38.2, right? We talked about how institutionally in the forex market, 50% is considered a holy grail as well, right? So where has it found support? Okay, it's broken that level, didn't find support. Okay, no worries. Next one, let's see what happens. 38.2, did it find support? No, it's not found support. Now we come to 50%, the halfway retracement. So we know now, okay, we've broken past 38.2. This is a big level, it's a silver ratio. We're now coming to the 50%. Okay, that's the institutional favorite. Okay, so maybe we might see something here. So we banged out that first support. We're now coming to the second, well, not a second, but the second key area we need to watch out for, 50%. Okay, we've now formed, guys, a bullish candle. We're going long, aren't we? Right? Once it finds support, you wait for the next candle to finish. If it's bullish in this case, great. Okay. It was a pullback and a trend continuation is going to happen. Okay. So recap, guys. For entry in an uptrend, you need to see if price finds support at a key fib level. Okay. They're all key fib levels. Okay. But once price starts to break 23.6 and it approaches 38.2, my eyes start to get wider. Once it starts to break 38.2 and approach 50, my eyes are literally like open, right? I look like a madman. Okay. Now it's at 50. It's found support. Indication is to go long. Okay. Key support. Support our key fib levels. Okay. Now, guys, it's essentially the opposite for a downtrend using fibs. Okay. In this case, we have our fibs drawn from the swing high to the swing low. Okay. And you see the key fib levels and whatnot. Okay. For entry, ladies and gentlemen, on a downtrend, you need to wait for price to find resistance at a key fib level. Okay.
Sorry, does somebody have on music?
Yep, we need that off. Don't worry, Nos is on it. Don't worry, Nos is on it. So, like I was saying, we have the swing high to the swing low for a downtrend. Okay. For entry on a downtrend, you need to wait for price to find resistance at a key fib level. All these are key levels. We know now what three levels we need to, our eyes start to widen.
I'm sorry, it's hard for me to hear what you're saying with the music.
Okay, Nos, I think what we'll do, we will mute everyone. Yeah, we'll mute everyone. Yep.
Denny, the music only comes on when you unmute yourself, so I think the music is coming from your end.
I don't play music.
Well, it's coming from your computer, because when you unmute yourself, it's definitely coming from you. If you unmute yourself, we can hear music. As soon as you mute yourself, we don't hear it anymore.
Okay, well, I'll tell you what, Nos, if you just mute everyone for the time being.
Yeah. That's fine.
Yeah.
That's
Great.
fine.
So, there's how to enter on a downtrend using Fibonacci. Like I said, we talked about how to enter an uptrend. Now we're on a downtrend. Now we look for key levels of resistance at these fib levels. Okay. We're going up. We've broken past 23.6. Okay. We're approaching 38.2. Blasted through it. Okay. Now we're at 50%. It can happen at any key level, guys. Okay. Now we've got the confirmation. Okay. We've got to close after resistance at a key fib level. Now I'm thinking, right, we're short. Okay. Right. So that's practically it, guys. Okay. That's the basis and the core of fibs, using fibs. All right. When to buy, when to sell. All right. Now, when I say that, guys, very important, like I was saying, for the candle, you want direction, bullish, bearish. It's important to wait for the candle to close in the direction of the trend. Okay. For example, here, if this is merely just a pullback, then we need this one to be bearish in a downtrend. If this is a pullback in an uptrend, we need the next candle to be bullish. Okay. Furthermore, always use confluence. Never only base your trades off fib retracements alone. Although it is one of the most powerful tools amongst traders, it is, hands down. It's important to use confluence. Those who know me know I trade using Ichimoku. It's a strategy which was developed in the Far East, in Japan, years ago, you know, but I use other tools as well, you know. I never solely rely on one thing, you know. And that applies to both up, you know, upwards and downwards direction, you know. In all your trades, regardless of what strategy you use, you should always use confluence, okay? This bit here, guys, is very important. Very important, okay? If price doesn't find support or resistance dependent on the trend at the 50% level, so here, if price didn't find resistance on this downtrend, if price didn't find support on this uptrend, and don't forget, guys, we're both at 50% now, okay, halfway of the swing, right? If price doesn't find support and resistance at that level, that 50% level, it may be that the current trend may be dying and it may not be a pullback, but a potential trend reversal. That's the way I look at it. Okay, not all the time, not always the case, but once it starts to break below 50% without finding support or resistance, I start to think, right, maybe this is a continued on sell or continued on buy. Very important. Okay, very important. If it finds support at 50%, you'll tend to notice the move continuing quite nicely. Okay, the original move, right? Very important, guys. How do I place my exits? Regardless of what strategy you use or however you trade, there's always two core elements to an exit strategy and exit plan, okay? And it should only be two things, right? Where do I put my stops and where do I put my take profits? Simple, right? If you don't know that, you know, it's not going to be looking good, right? Stops is very important. Why? To manage risk. Take profit is very important as well. Why? It limits greed, okay? It limits greed. Stops, okay? Stops, right? Now, we've got here essentially stops you want to place. So this is the example of the buy, this one here, okay? So we're long, right? We're long, okay? Where do you place your stops? You place your stops, you know, kind of midway. There's two things, okay? There's two things you can do. You kind of put the stops midway between the 50, in this case, 50 and 61.8, okay? Midway between the retracement level it's at and the one below or the one above, right? Pretty simple, okay? Or, you know, if you're willing to kind of spread the risk a bit, maybe use smaller lots, just put your stops to the previous or to the next, if it's a buy, fib level, or the previous, well, still the next, but slightly higher if it's a sell, okay? So That's a good stop loss. That's a good stop loss. 61.8. It's a good stop loss. 61.8 is a good stop loss. Okay. Manage risk. So that's part one of our exit plan. Detailed. Okay. Part two. Like I'm saying, guys, don't solely use fibs blindly. Okay. Very powerful tool, however. I don't trade without it. A lot of my, I know for a fact, us traders at the Pip Room don't trade without it. A lot of my peers and colleagues don't trade without it either. Okay. But back to what I was saying before, confluence, right? Confluence. Where to put TPs, take profits. Okay, so this is example. This is the same example, the buy setup we had. Okay, if we use fib retracements for our specific entries, like we do here, this is a good entry right here. We're trying to find areas of support at key retracement levels, right? We use extension levels as exits. Okay, the general rule of thumb is you want to use the corresponding fib level as a reasonable TP. So for example, if you're, let's say, for example, here, yeah, price found support at 50%, right? The corresponding extension would be 150%, okay? Now, if you're on a daily, that's going to take patience, okay? So I say around 6 or 7 out of 10 traders don't wait that long, okay? Because you're going to take profits along the way. Or take profits along the way, for example, in between key fib retracements. That's why it's important, guys, to use this in higher time frames, because even between these key fib levels, it can be 80, 60, 70, 80, 100 pips. On the hour, 15 minute, you won't get that. Yeah? So that's where your TPs are. In between fib levels. So for example, here, a good take profit could have been the full retracement, 23.6. Perfect. Or if you want to ride your luck, you could have put maybe 3 different trades on. Get a lot size, for example, if you've got a $500 account, general rule of thumb, you don't want to kind of be using more than 0.04, 0.05. Spread that across 3, maybe 0.0, 0.02, yeah, 0.01, 0.02. Open 3 different trades. Stop just below there. Yeah. First take profit on the first trade, 23.6. Second, 100, right? Then you've won. And the third one, okay, above there, right? And then what I do in regards to my stop loss, okay, because we at the Pip Room, we always use trailing stop losses. Why? Because we don't ever want to lose profits. So choose a trading stop, bring it up as price goes up. That's maybe something you could do. So they're the ways you can put your stop losses in between the fib levels or the fib level below or above. Take profits in between the key fib levels or the corresponding fib level. Right, so in this case, 50% would be 150, 61.8, 1.618. And we'll come on to this later on.
Dad, do you massive favour?
So let's see some examples. Okay, so I'll start my share now and we'll go to the charts. Let's get something loaded up.
Yeah, just before you do that, Thanks, guys. And that's super clear to me.
Great.
But anybody have any questions about using Fibonacci before we go to the charts? I think sometimes, you know, when you see it in the charts, you can learn a little bit more. But just type one in the box if you follow everything so far. And if you have any questions, just pop them in the chat. Okay, so Kim, you got it? Yeah. Darius, cool. You got it? Andrew, yeah. Okay. Little, yeah, you got it. Okay.
Mm-hmm.
All right, just keep typing one if you've got it. I know you trying to find your pads or whatever. Some of you may be driving or somewhere. Okay. So I've got a question here. I'm just going to take a question here just to break up the learning here, Azin, right? From Silmara.
Mm-hmm.
Silmara, what's your question? And can I unmute you? Go ahead. I've unmuted you, Silmara. What's your question?
I didn't understand when can I put the stop loss and the take profit with the Fibonacci.
Okay, what we'll do, we'll hold questions, and because I would have shown that in the visual representation, Samira. Okay, so great question. Okay, so visually it will look better. So with the stops, like I was saying, you want to have it in between fib levels. Okay, so I'll go back to the image on the PowerPoint, and then I'll go to the charts and show you. Okay, so
Fantastic.
we've got here, for example, how to placement exits, stop loss and TPs. The stop loss, as you can see here, this level here is literally in between. If it's a buy, okay, the stop would be in between the fib where it found support and the one below it. So in this case, it would be between 50 and 61.8. If it found support here, it'd be between this level and 50, and so on and so forth, right? Now, if it's a sell, the price coming up, it's found resistance, sorry, at 50. You can have the stop loss in between the fib where it found resistance and the one above it, in
Great.
between. Or if, like I was saying, if you're willing to spread the risk, okay, and risk slightly more, for a buy, you can put your stop loss at the fib level directly below the area or the fib where it's found support. So in this case, it would be 61.8. Or in this case, if it was a sell, you'd put the stop loss at the fib level above where it found retracement, which in this case, again, would be 61.8. Okay?
Clear. Super
Okay.
clear.
Right.
Thanks for that.
No worries.
There will be some other questions, but as Zane said, let's just keep going and
We'll keep going.
questions
We'll keep
until the end. All right?
Yeah, no worries. Okay, so if we can mute everyone again, that'll be great.
That's
So
good.
let's have a look. Okay, let's have a look. So if you guys use TradingView, okay, you essentially go to the left hand where you have all your columns, and you find your rectangles and your text and stuff, and above you start having pitchforks, and if you go a bit to the middle, ironically enough around 50%, you get a fib retracement tool. Okay, now people that know me know why I trade using Fibonacci candles. Okay, doesn't matter, you can use fibs on normal candles or Fibonacci candles. Okay, but just for presentation sakes, I'm gonna use normal candles. Okay, so this is a good example. Now I'm on a daily, weekly, or monthly, for example. It's better on a higher time frame, guys. You'll start seeing why in a bit. So this is one I've marked out here. Let's load up for a bit. It's gonna load up. Okay, brilliant. So you can see we're on this uptrend, massive uptrend. Okay, now people might say to me, well, Zane, isn't the retracement from here all the way to here? That's the uptrend, isn't it? And that's where the downtrend continues. And no, I'll tell you why. Okay, so when price started at the low here, this is around the low here, right? You can see where the swing low was, which was just literally at that wick there. Yeah. And the swing high was here. Okay. Now, what did I say in my presentation? What did I say in my presentation, guys? If price doesn't find support or resistance, dependent on the trend, at the 50% level, then it may be that the current trend is dying and it may not be a pullback, but a trend reversal. Yeah? This can either be a long-term trend reversal or a short-term trend reversal. Yeah? Okay. Let's go back. Got a swing low, swing high, one uptrend. Price went up. Okay. Beautiful uptrend. Right? Price has gone down. Broken at 50. Okay. It's gone up. Right? Once it broke that 50, even though it retraced, guys, okay, I started thinking in my mind, right, this might not continue on as I think it will. Okay. So my point is, guys, there's going to be trends within the macro trends. Okay. That's how it is. You see them so much. Okay. For example, this is one here I marked out because this is one I caught a couple of years ago when I literally first started trading, believe it or not. Okay. It's a sell I caught. So if I quickly go back to my PowerPoint, and I show you what it means, so it's important you guys understand what I'm looking at. For entry in a downtrend, you need to wait for price to find resistance at key fib levels. Resistance, okay. So bear that in mind, right? We need to find key levels of resistance. Okay. So price is broke. This is the trend here. Yeah, this is the trend here. Okay. Now, essentially, what I'm going to do, the trend came to here. Okay. You can see, and price started reverting. Okay. Price started reverting. So we can see nicely how price is, respecting these levels on these zones quite nicely, and you can get into these levels, and in between, 50 and we're talking it's 200 pips. It's good take profit areas. Okay. And you found here how price found support. So we're thinking, right, could this potentially be a trend reversal? No, because it didn't break above 50. Great, support back, and we're down. Okay. Now, when price was here, I remember this very well, guys. This is one of the first setups I think I ever did, right? Price came here. Okay. Okay, good area of support and whatnot. Okay, but it broke past 236, found support. Okay, we're long. Intraday traders would love this kind of stuff. Yeah. Literally went up. Found support here. We had it stops below here. You're laughing, really. Intraday traders would love this 500 pip move to the top in the space of 2 weeks trading, maybe. Okay. Me, I was looking for this to go long if this was going to be a trend reversal, right? Here. Okay. So this would have been a great long opportunity for you, If I knew what I knew now, I would have gone long here. Why? Because we found support, right? We trade to the next fib level, okay? We could trade in the pullbacks, guys. Nothing wrong with trading the pullbacks, We could trade here. Resistance, short. Resistance, short, right? Support these fib levels, long, okay? It approached the 50% level, so I'm thinking, right, is this going to be a trend reversal? So we're looking long. So maybe I should tell my take profit at a 618 level, golden ratio. Or maybe this is going to be literally, this is just a pullback, right? Turned out now in the grand scheme of things, it actually was a trend reversal, right? But price wicked out for a long time, October 17 to December, a couple months, right? Was hovering around at 50% level. Okay? Was hovering around, right? And obviously using confluence, like I say, don't, nakedly go into these setups. Okay, yep, it's gone there. Okay, right. So Here, the candle where it came. The next candle isn't bearish, okay? It's not bearish. Here it's bearish now. Next candle's bearish. Should I go in? Yes. Great, okay. So some of you nakedly would have gone in, but you know, I've looked at my confluence facts. I've looked at my different tools I use. It wouldn't have been a good entry to get in there, okay? My entry would have been around here, okay? You know, and I caught, I think it was about 200 and something pips, yeah? As an 18-year-old, yeah? I think I was on the way back from college, right? I was trying to tell my mum that I've caught 250 pips. I think she thought, you know, I was talking about something I shouldn't be talking about, you know? So it's a great tool to use.
She thought you caught tits.
Probably. So, you know, you can see here how it's worked. It wasn't a trend reversal, right? Let's look at GU. Again, this is another setup that that I caught, right? And the setup I caught, another example. Okay. Price, this is a swing here. Okay, so, and again you can see how this is a continuation. We're still short here. Okay, so if I kind of do this, so forget all that after, that's where price came to. That was a swing low, swing high. Okay, as a result, and you can see price has found resistance was short, resistance is short, you know, resistance is short, made a retracement, now it's long. Okay, right, didn't find resistance at a 236 level. Okay, closed above. Okay, resistance is just above. A bearish candle isn't resistance. Okay, we're long. Okay, found resistance, however, at a 382 level this time. So the gold is, you know, still a silver ratio. Okay, right, and I shorted it all the way to the retracement level. Okay, so I got in. See here, candle formation as well. Again, confluence, guys. You know, evening star, morning star, inverted shoulders, head shoulders pattern. 500 pips I caught on this trade. You know, so with confluence, guys, it's an absolute asset. Okay, Euro GBP. Let's see where we're at now. Okay, again, you can see the market on a daily how it's boomed up. Okay, you can see here how literally price, this is the previous swing. This was swing from around when? January this year to May. January, 5 months. Downtrend, right? Okay, price didn't find resistance at the 236. Didn't find resistance at the 382. Didn't find resistance at the 50. It broke the 50. Now I'm thinking trend reversal, and we're all the way long now. And I think if you guys have been following the markets, this has been absolutely crazy, this whole move, right? People have been wanting to sell this for quite a long time, but it's not selling. Well, it wasn't selling, right? So from that 50% level, guys, after it found support, it's got nearly 200 and something pips, 240 pips, you know? Now it's at a good, now it's approached that level, okay? Now we're starting to see price maybe break the 76 level, you know, good opportunity for it. Could it come down to the 61.8? If it breaks that level, will it come down to the 50? You know, will this happen? You know, this is what can happen with Euro GBP now. It can continue on, right? It can come down to 61.8 and continue up, pull back. Or it can break both levels and come to the 50 and have a pullback. Or it can break all levels and it'll be a trend reversal, okay? It can break the 50% and become a trend reversal, okay? If you want to screenshot that, guys, you're more than welcome to, I guess. But that's basically the science behind it. Okay, very important. One thing, never solely base your trades of one thing. Fibs are very powerful. However, you use them with confluence, right? Like not just saying indicators indicate things. They don't predict things. They don't tell you, right, in 10 minutes time, it's going to go high, it's going to go low, you know? So that's really it for me, guys. Okay. In summary, okay, we talked about rabbits. Okay, we talked about the maths behind it. We talked about how this is literally a prehistoric ideology, if you like, you know, that people still use today. We talked about how it's applicable in industry, manufacturing, photography, filming, nature, right? That's why because it's so set in stone, that's why people use it. We talked about what retracements are, the temporary price reversals. Don't indicate trend reversals. Okay, we talked about the key fib levels. Okay, we talked about how to enter using the fib tool when you find the strong trends, and you'll find them trends in a higher time frames. You know, you can enter after the pullback. You can make money during the pullback. Same principles apply. How do we know when the market will pull back? The retracement tool. We talked about if it's in a uptrend and we want price to continue up, we want price to find support at its key levels. Get a bullish candle, then we're long. The opposite for a selling market. If it's in a downtrend, we'll price to find resistance at its key levels, and then we're short. Yeah, wait for that bullish candle to form. Wait for it to completely form. Bearish, sorry. Wait for this bullish candle to form completely. Don't go halfway. If it's a daily, wait for a daily candle to close. Wait for it to close in the direction you want it to. And like I said here, it's important to wait for the candle to close in the direction of your desired trend. And use confluence, right? Apply it to your strategy. Key point here, if it doesn't find support and resistance at the 50% level, you know, even if regardless if it's a buy or sell, it may be that the current trend is dying and it may not be a pullback but trend reversal. So maybe you need to start to adjust your fib levels then, or where you draw your fib retracement tool, sorry. You know? We talked about how to place your exits and where stop loss should be, right? In between fib levels, or the fib level below if it's a buy, or the fib level above if it's a sell. We talked about take profits and how to take profits in regards to in between fib levels, which is what I prefer. Or if you're a swing, if you're a swing squared trader, which is what mentors used to call them. My mentor, she said, people that was holding trades for months for like swing squared traders, like you have, squares and, these guys hold on trades for months, or if you have, the guts to do it, to use the corresponding fib level. Okay, we show some examples as well. I'll quickly show you guys on here the fib levels. You can see how we got 0, 236, 382, 50, 0.618, 786, 1. Now these are your extensions, the 1618. You can tick all these 1, 2, 3, 6. We don't really want to use 2 point and 3s and all that kind of stuff. That's a bit excessive. But if I start going here, you'll start seeing them all. If I show you here, you can see how these work, right? So they're your extensions. Okay. So, ladies and gentlemen, I do hope you have found some benefit in that session. Okay, this has been recorded. It will go on. Well, Nos will explain that later on. What will happen to it? You know, please do follow us on Instagram at the Pip Room. You know, if you guys haven't joined the Pip Room, message Nos at Kologna, Kologna. You know, he's the man you need to go to. You know, this is an example of the kind of sessions we like to run. You know, people in the Pip Room will tell you how many calls we have a week. You know, that's our website there as well. Okay, so that's it from me today, guys.
Zane, just before you go, right? I want to
Yeah.
give these guys something because
Oh, okay.
just real quick. I want to give you something. So that's